On Business Incorporated today. Inflation in Turkey hit 17.5% in June. Ghana to issue green and social bonds of up to $2 billion. After over 3 months, Ever Given to be released July 7th. Hello and welcome to the program. I'm Ini John Mekwa. Well, let's begin the show with market figures from the African continent. The local bourse in Nigeria started the week in the negative zone. As intraday, the all-share index was down marginally, while South Africa's JSE lost 0.36%. On the flip side, Egypt's share index was in the positive territory, up 0.28%, while the Kenya closed negative on Friday, over 2%. Negative sentiment permeated the market in the Middle East at intraday, with Qatar leading the pack. The market shed 0.35%, while Saudi Arabia lost 0.1%, and Dubai was down 0.03%. Only Abu Dhabi gained 0.67% at intraday. European stocks were slightly lower today as markets kept an eye on oil prices ahead of a crunch meeting of the OPEC Plus oil-producing alliance, which has been postponed till today. The first half of 2021 has smashed global records, where we have Conrad from Frankfurt to tell us more from that region. Hello, Conrad. Good afternoon.
Good afternoon from Frankfurt. It's great to be back on Channels TV. Thanks for having me.
Great to have you too, Conrad. The first half of 2021 has smashed global records for mergers and acquisitions. The tech industry, which saw its fortunes rise during the pandemic, led the charge with an unprecedented frenzy of deals worth more than $671 billion. Is this likely to continue?
It is likely to continue because there's so much money out there that wants to be invested, and mergers and acquisitions is a perfect vehicle to invest your money in. Then you can make more eventually. Of course, IPOs too. Here in Frankfurt, we've seen a very strong first half of this year, 2021, and it's likely that the second half of 2021 will also be quite busy in terms of IPOs. The window of opportunity is open, is what traders are saying, and they hope that this will remain that way for a while.
All right, so oil is trading steadily as OPEC Plus seeks to break an impasse over supply. Looks like Saudi Arabia is still against increasing capacities.
Yes, $76 a barrel for Brent oil from the North Sea at the moment. That's relatively high, and it's expected to go further up if the Saudis and OPEC Plus cannot agree on higher capacities and higher production and delivery of oil. The market needs it. That's what people on the oil markets are saying. We have this, we have strong demand, but we do not have enough supply, and this has to change. If not, then it's likely and it's possible that the price heads towards $100 a barrel, and that's not something that OPEC Plus wants either.
Well, champagne or beverages. Russia restricts the right for beverages to be called champagne. Only Russian sparkling wines can be called champagne in the future. Conrad, why are we having this conversation at all?
Well, we have this conversation because this is Europe. And in Europe, people fight over who has to say what something can be called and what shouldn't it be called. And, it's the European Union usually that gives the direction that says regional denominations are to be followed, like from Champagne in France. That's the region where the name comes from, and that's where in Western Europe you are allowed to call your sparkling wine champagne. The Russians now say differently. They say only Russian sparkling wine can be called champagne. Champanskoye is what the Russians call it, and you know, it's a U-turn in terms of who says what the description will be and what the direction will be in terms of calling a beverage a name. It's very surprising to see the Russians now call something champagne, even if, of course, the origin is in France.
Well, we're going to have to get a name for it in Nigeria, I guess. Thank you so much, Conrad, and enjoy the rest of your day. So we move over to London now, where Juliana is standing by. Hopefully it counts down to Freedom Day, July the 19th. I don't know. Juliana, good afternoon.
Good afternoon, Innie. Yes, we're counting down.
Okay, good. Well, before we get to that, car sales recovery has been squeezed by supply issues. People in the UK bought over 100,000 new cars in June. How's the market at this time, and what's the outlook for the week?
Yeah, it's pretty good. We've had this data showing that car sales in the month of June are up 28% year on year, although the only thing is some observers are calling this an artificial update because, of course, this time last year, car showrooms were all closed, and unless you're, pretty positive at what you're getting, a lot of people weren't buying new cars online. They did want to go into showrooms, but it is showing an increase, which is good. Also within this data, it does show that hybrid vehicles and electric vehicles accounted for about 17% of these new car sales. And in fact, the Tesla Model 3 is one of Britain's most sought after cars, and this gives a push and really another big tick to last week's announcement from Nissan that they will be investing, with the help of the British government, £1 billion into building a new gigafactory just next to its plant in Sunderland to help the UK produce more electric vehicles, as there are concerns that we're way behind our competitors in Germany and in America. So one of the reasons why car sales are still a bit slow, especially the new car sale vehicles, is this global semiconductor chip shortage, which has been a discussion over the past couple of months. It is starting to hamper down. A lot of people within the industry are calling this a symptom of long COVID within the industry. Jaguar Land Rover actually had to halt some productions of new cars because they don't have it. And that's one of the reasons why used car sales, that market is doing particularly well, because those that can't afford to wait for a brand new car are buying an older model instead. So it's good in one way, not great in the other. There was a subdued start at early trading on the FTSE, but it's very much in positive territory at intraday. The all share is up 0.30%. The FTSE 100 is up by 0.23%, and the FTSE 250, the domestic market, is also up by 0.58%. In the currencies market, the British pound is up on the US dollar by 0.15%, up on the euro by 0.01%, and down at intraday on the Japanese yen by 0.11%.
And UK services firms face staff shortage, backlogs, and rising prices amidst the recovery. What reactions have followed this update?
Well, it's interesting. Yeah, this is about the PMI data. So this is the data that obviously has a good forensic look at the private sector and how it's doing. We had some flash estimates in last week. Now we're getting the final numbers, and it's come in for services in the month of June at 62.4. Now, this is the first time we're seeing a slight downgrade. In May, it was 62.9, but the flash estimate was at 61.7. So it's better than what some economists had suggested, but slight concerns at the fact that we are starting to see a little bit of slow growth, and we've been discussing this extensively, the fact that there are vacancies out there, but the service sector in particular, hospitality chefs, they are struggling to get people back into the kitchens. Many of them gave up hope because the industry was shut down for so long, and of course there is an after effect of Brexit. A lot of Europeans that worked in kitchens have decided to go back. So a little bit good, a little bit bad. We're still far on course to have strong Q2 GDP figures. We actually get the May GDP figures on Friday, and everybody is expecting to see at least a 3% month-on-month growth from the month of April.
So countdown or not, the Prime Minister is to confirm or not confirm Freedom Day. What have you heard?
Well, here in the UK, Innie, the tabloids seem to have a pretty strong relationship with Prime Minister Boris Johnson and the Conservative Party. So if it's on the headlines, then it's deemed to be true. And all over the weekend, what they were saying is, yes, alas, you know, July 19th is going to go ahead. It will be an end of all restrictions, at least for England. Prime Minister Boris Johnson will give a live televised address at 5 p.m. today, where he is expected to say that, yes, all roads are leading to an end of these restrictions, which will include not wearing a face mask. This has already caused lots of controversy in British media and on social media. The Mayor of Manchester, Andy Burnham, as well as Sadiq Khan, the Mayor of London, not sure whether or not they want to stick with that, especially in confined spaces like the Tube. The work from home mandate will be lifted, which is going to be good news for the coffee shops and some restaurants and bars that do rely on people who are working in the office. And there will be no more social distancing, which finally means that nightclubs and the nighttime industry and those sectors that do rely on closed confined spaces will be able to start functioning again. Prime Minister Boris Johnson, along with the newly appointed Health Minister Sajid Javid, say that we have to live with COVID, and the only way we can start getting the economy ticking again is by lifting these restrictions. And of course, most importantly for people in Britain, if you do have a double vaccination, you can travel without having to quarantine. So I may see you in Lagos sometime soon, Innie.
Oh, that would be lovely, Juliana. I know you're really excited, and it would be really nice to see you anyway. So enjoy the rest of your day. Yes.
Thank you.
All right, so moving on now. Shares in Asia Pacific were mixed today as Brent crude futures hovered around $76, while investors watch for developments from a meeting of OPEC and its allies. Tech shares in Asia were mostly lower. Shares of Chinese tech firms in Hong Kong fell as regulatory fears resurfaced. Stocks of Japanese conglomerate SoftBank Group also plunged 5.39%. In other Asia-Pacific markets, the S&P AX 200 in Australia closed fractionally higher at 7,315. Mainland Chinese stocks edged higher on the day as Shanghai Composite rose 0.44% to 3,534.32, while the Shenzhen Component climbed 0.32% to 14,718.66. Hong Kong's Hang Seng Index fell about 0.7% as of its final hour of trading. In Japan, the Nikkei 225 slipped 0.64% to close at 28,598.19, while the Topix Index shed 0.37% to finish trading day at 1,948.99. South Korea's Kospi closed 0.35% higher at 3,293.21. MSCI's Broadex Index of Asia-Pacific shares outside Japan over above the flat line. And in the United States now, markets in the United States are closed for the Independence Day holiday. Meanwhile, stocks fell on Friday, and the S&P 500 also closed in the negative territory high after the June jobs report showed an accelerating recovery for the U.S. labor market. The broad market index rose 0.75% to 4,352.34, while the tech-heavy Nasdaq Composite climbed 0.81% to notch its own record at 14,639.33. The Dow Jones Industrial Average added 152.82 points to close at 34,786.35. The S&P 500 has now risen for 7 consecutive sessions, its longest winning streak since August. In the oil market, prices fell today with Brent dropping about 4 days of gains as investors and traders await crucial talks by OPEC Plus following disagreements with the group that could lead to major producers pumping up volumes to grab market share. Brent crude was down 0.5% at $75.77 per barrel after falling 1 cent last week, the first weekly decline in 6. U.S. oil was down 0.4% at $74.86 a barrel, having risen 1.5% last week. the sixth consecutive week of gains for the contract. OPEC Plus had voted to increase production by about 2 million barrels a day from August to December 2021 and to extend the remaining output cuts to the end of 2022. But objections from the United Arab Emirates has prevented the agreement. We'll take a break now. When we come back, we'll head over to DRC. Join us then. Welcome back. You're still watching Business Incorporated on Channels Television. Now, for months, protests against the killing of civilians, worsening humanitarian and security crisis have disrupted economic activities in the northeastern part of the Democratic Republic of Congo. Matt Kinniga paints the picture better for us as he joins us from London. Hello, Matt. Good afternoon.
Good afternoon. Thanks for having me on the show today.
You're welcome. Well, what does this escalating of unrest tell us about the state of security in the northeast of DRC?
Yes, so I think it's worth remembering that this really came to the international, well, this issue was brought to the international scene or attention as a result of the killing of the Italian ambassador in February in North Kivu this year. So it was a very high-profile event that really illustrated the difficulties of that part of the world. The problem with that part of DRC is that there are multiple causes of unrest. It's actually not a very clear situation. It's quite a fast-moving situation. What we believe is happening is that there's a combination of economic malaise in the region, as well as people, military groups seeking military and political control over quite a remote part of DRC that is very far away from the political center in Kinshasa. So what this means is that the problem is probably a bit larger and a bit more significant than we previously thought, and it's probably going to take a lot of effort, both in terms of monetary resources but also military resources, for the Congolese army to regain much more control over the region. So it's probably an issue that's going to remain chronic for quite a while in the future.
So how do we expect this to affect the economic outlook for the country?
So very broadly, it's unlikely to have a significant impact on the overall level, the overall economic outlook for the country, and this is because the major drivers of economic growth are located in the far south of the country. So in the copper-producing parts of the country, as well as Kinshasa in the far west of the country. So geographically they're very far apart. They are unlikely to affect the major drivers of economic activity very directly in DRC, but there nonetheless will be an effect on sentiment. Into non-copper industries, for example. It will also affect business activity and business conditions and overall levels of economic activity in the northeast of the country for sure. It may also have a bit of a fallout for Uganda and some companies that supply eastern DRC from Kenya, for example. So quite a limited impact on the country's economic outlook, but nonetheless still a bit of a chronic problem for businesses in the northeast.
And given the high inflation rate and sharp depreciation of the franc over the last year, how do you expect conditions to change for businesses?
Yeah, so if we zoom out and look at the sort of monetary landscape in DRC, so apart from the security challenge in the northeast, there has been double-digit inflation. So the last inflation figures that we got from January were 20% year on year, so very high inflation. We see the inflation rate easing somewhat over the next year or so, and this is because the currency is likely to remain relatively stable. So we're not expecting to see another major depreciation like we saw over the last year or so. The currency is probably going to remain relatively stable through the end of this year, beginning of next year, because of the improvement in copper exports that is driving the economic rebound. But nonetheless, inflation, although it will slow, it probably will remain in double digits. So we expect it to average about 13% this year, maybe about 9 or 10% next year. So slightly better for businesses in terms of the monetary landscape, but some challenges ahead over the next year or so.
All right. Well, we do hope that they are able to get through those challenges in a very short time. Thank you so much, Matt, for sharing your thoughts with us on DRC. Matt Kindiger is the Associate Practice Lead of Frontier View, Sub-Saharan Africa. Well, moving on now, we go to Ghana, where it's planning to issue green and social bonds of up to $2 billion by November, which would make it the first African country to sell debt to fund development programs. The West African economy, which is planning to borrow up to $5 billion on international markets this year, would use the proceeds from these sustainable bonds to refinance debts used for social and environmental projects and pay for education or health. The country will use the proceeds to forge ahead with the Free Secondary School initiative, which started in 2017, among other programs, despite having recorded its lowest economic growth rate in 37 years in 2020. Africa's top gold producer, which is targeting a budget gap of 9.5% of gross domestic product this year from 11.7 shortfall in 2020, expects its output to expand to ease economic pain. From there, we move to Egypt. The Ever Given container ship, which has been detained by Suez Canal authorities since March, will be released on the 7th of July. That's in about 2 days after agreeing on a formal settlement. The Suez Canal Authority originally wanted $916 million to compensate for relief expenses, reputation damage, and revenue loss. However, the compensation reached now is $550 million. The Ever Given was seized by local authority after it blocked the Suez Canal and disrupted global shipping and trade for a 6-day period in March. The container ship was dislodged on the 29th of March and had been placed in a lake between 2 stretches of the canal waterway in the aftermath. Saudi Arabia is to provide 270 million Egyptian pounds to help support small and medium-sized enterprises in Egypt. The Industrial Development Bank was granted 100 million pounds to finance clean energy and to purchase additional equipment. Additionally, the Bank of Cairo was granted 100 million pounds to finance micro-enterprises. The grant aims to support the development of SMEs in Egypt and to be a catalyst for job creation. In total, Saudi Arabia Grants Management Committee has awarded 1.5 billion pounds to support the financing of 2,500 projects in 27 Egyptian generates. And Turkish inflation accelerated faster than all estimates last month, reducing the likelihood of a summer interest rate cut sought by the country's president. Consumer prices rose an annual 17.5% through June, up 16.6% the previous month on the back of broad-based gains led by food, according to the data released today. Producer prices rose an annual 42.9% through last month, the most since October 2018. Gains likely to eventually filter through to consumers. Food inflation, which accounts for roughly a quarter of the consumer basket, rose 20% compared with 17% the previous month. It's well above the central bank's interim target of 13% set for the year's end. A core inflation index showed prices excluding volatile items such as food and energy, which also climbed to an annual 17.5 through the month of June, up from 17% in May, a sign of strong inflationary pressures underlying the headline figure. Annual retail inflation in Istanbul, Turkey's largest city, accelerated to an annual 16.12% in June from 15.78% in the previous month. Turkey Central Bank will hold its next rate-setting meeting on the 14th of this month. And foreigners are not allowed to operate in reserve sectors in Zimbabwe. It's for citizens only, according to the government. The reserved sectors include transport, retailing, wholesaling, hair salons, advertising agencies, estate agencies, grain milling, bakeries, tobacco, grading, and packaging. According to the ZANU-PF Secretary for Indigenization and Economic Empowerment, Dr. Mike Bimha, The issue for reserve sectors was outlined in its reverse indigenization and economic empowerment policy. He also said that foreign entities in reserve sectors were only allowed where firms could fund local production, adding that local authorities were supposed to ensure that this aspect of the policy was enforced. And that's it on the program today. Thank you so much for watching Business Incorporated. I'm Ini John Mekwa.